Recently, the cryptocurrency market has been amid a widespread sell-off, with Bitcoin and Ether, the top two tokens by market cap, plummeting below $26,000 and $2,000, respectively. This is despite the fact that Bitcoin is currently the most valuable cryptocurrency. The fall, which is occurring at the same time that fears of inflation are hammering stock markets, is being viewed by billionaire Mark Cuban as a repetition of the dot-com bubble that occurred in the early 2000s. Speculative investing in the late 1990s caused the prices of internet-based companies to skyrocket, which drove the Nasdaq Composite Stock Market Index up 400% in 5 years before a sharp drop in 2001 and 2002. Welcome to Crypto News. Today, we will talk about Mark Cuban's opinion on crypto. Stay with us until the end of the video to learn more. Like and subscribe to this channel and hit the bell button to get notified of all the latest updates. Let's jump to the topic. Mark Cuban, value depends on usefulness. Mark Cuban, a billionaire entrepreneur and owner of the NBA's Dallas Mavericks, stated that despite the collapse of FTX, he remains bullish in the area and has invested in crypto, mostly because he believes in smart contracts. A token's value is determined by the applications that operate on its platform and the usefulness they generate, he tweeted on November 13. According to a recent Bakkt study, buyers appear unfazed by the 2022 market volatility in FTX collapse. Before the FTX disaster, 89% of crypto owners stated they were inclined to purchase crypto in the future, but following the FTX failure, only 7% of crypto owners expressed the same view. Meanwhile, the poll revealed that crypto-curious sentiments remained unchanged. Cryptocurrency, and Bitcoin in particular, has already demonstrated that it has actual value and longevity, said 𝗔𝗕𝗢𝗏, Chief Product Officer of Bitcoin and Cryptocurrencies at Bakkt. I believe Bitcoin is distinct from other cryptocurrencies because it is a decentralized, leaderless digital currency, and its utility is only set to increase in the future in terms of adoption and application. 𝗝𝗡 noted that while the market is in decline, this volatility has exposed some unsustainable and fraudulent operations. This is not the first slump, nor will it be the last, but recent events are helping to clear the market of bad actors, he said, adding that what happened with FTX was an institutional failure caused by fraud, not a failure of Bitcoin technology. He continued, the players that will be successful in the long run will be receptive to transparency regarding their operations and will embrace intelligent regulation. Experts, FTX did not pose a crypto concern. In November, Tim Draper, venture capitalist and founder of Draper Associates, predicted that Bitcoin's value would surpass $250,000 by June 2023. Similarly to many other proponents of cryptocurrencies, he pointed out that Bitcoin's decentralized nature is one of its primary virtues. FTX was centered on one individual, Draper tweeted on December 3. Decentralized currency is our greatest chance for economic development. Governments must develop software to tax enterprises operating within a Bitcoin-walled garden in order to increase public confidence in Bitcoin. The consensus among Bitcoin maximalists and crypto believers appears that FTX was not a crypto event and that, despite inflicting immense misery on thousands of customers, it is helping the industry return to the fundamentals of what crypto and blockchain truly are. Saying you are not positive on crypto due to FTX is like saying you are not bullish on equities due to Bernie Madoff, said Rick Edelman, founder of the Digital Assets Council of Financial Professionals and former financial advisor. FTX is unrelated to blockchain or digital assets, just as Madoff was unrelated to the stock market. Madoff was only another con man who orchestrated a tremendous swindle. It also appears that Sam Bankman-Fried is a con man who orchestrated a major fraud. Madoff perpetrated his fraud on the stock market, while SBF employed cryptocurrency. Edelman noted that FTX and SBF do not affect the core benefits of blockchain and digital assets, as blockchain technology enables organizations to operate more quickly, securely, and affordably, with greater transparency and inclusivity. This is why 90% of the world's banks are building the technology, employing more than 70,000 software engineers, he stated. In the past 2 years alone, more than $35 billion has been invested in this technology. PwC predicts that it will add roughly $2 trillion to the world economy by 2030, while McKinsey predicts that 70% of global GDP will be digital by 2030. According to the BIS, all governments will have implemented CBDCs by then. China and the Bahamas have already done so, and there is broad bipartisan support in nearly every nation. The future following FTX. Edelman stated that various beneficial developments occurred in the space after FTX. To name only a few, Warner Music said that consumers could purchase and listen to music NFTs through the Polygon blockchain, and Goldman Sachs stated that it intends to invest tens of millions of dollars in crypto firms. Indeed, Goldman Sachs CEO David Solomon wrote in an opinion piece for the Wall Street Journal on December 6, "The quick collapse of FTX aroused worries about cryptocurrencies and blockchain technology, the software powering crypto assets." However, he continued that blockchain technology impacted heavily regulated businesses, unlike past innovation waves. The advent of email has not rendered FedEx and UPS useless. However, blockchain innovations, such as peer-to-peer payments and the tokenization of traditional assets, alter how firms raise capital and investors trade equities. This has extensive repercussions for the global economy. Mark Cuban's viewpoint. Crypto is experiencing the same slump as the internet, Cuban tweeted on Monday. The owner of the Dallas Mavericks and investor on ABC's Shark Tank stated that, after the initial burst of intriguing apps and NFTs, or non-fungible tokens, crypto is entering an imitation phase, in which too many enterprises fail to offer fresh utility to the market. Cuban expects that the blockchains that emerge from the pause will employ smart contracts to boost corporate productivity and profitability, as opposed to those who aren't doing anything novel. Smart contracts are digital agreements that are encoded and maintained on the blockchain. They are used to power decentralized finance, DeFi, applications and non-fungible tokens, NFTs, and are required for the formation of decentralized autonomous organizations, DAOs. Cuban tweeted, "The chains that mimic what everyone else has will fail. We do not require NFTs or DeFi on all chains." Cuban is unsure if other crypto market lulls are forthcoming. "I'm clueless," he told CNBC Make It. Cuban has previously equated crypto to the evolution of the internet. In January of last year, he stated that the development of blockchain technology reminded him of the early days of the internet, and that current blockchain startups are comparable to internet pioneers such as Broadcast.com, whose 1999 sale to Yahoo made him a millionaire. In 2021, he stated, "It took time for bandwidth to become available and inexpensive enough for streaming and cord cutting to become a reality." That was almost 20 years into the internet, but cryptography is only 10 to 12 years old. Cuban is a successful cryptocurrency investor with holdings in a variety of digital coins, NFTs, and blockchain startups. If you made it to the end of this video and are interested in knowing more, let us know which part of the video you liked the most in the comments section below. We will appreciate your comment and work to make a video on your desired topic with an account shout-out. Please like and subscribe to Crypto News and hit the bell button or use the link in our description to be notified of our next video. Thanks for watching.